the emerging markets per se have fundamentally very attractive growth dynamics. I think most people understand the urbanisation that's occurring in emerging markets. United Nations estimates in the next 20 years we're going to have another 1 billion people become urbanised in those markets. We're going to have increasing per capita income. We're probably going to have economic growth, nominal economic growth, probably in the 8 to 10% range in many of the large emerging markets like China, in India and much of Latin and South America. So fundamentally the macroeconomic backdrop is very attractive, but then you then have to be careful, because just because you've got a lot of economic growth does not mean that you're going to have fantastic investment returns. And I think that's where some of the issues are at the moment, because emerging markets are a fad at the moment. Everybody understands the macroeconomic backdrop to the developed world, which is deleveraging, low economic growth, very high unemployment, current account deficits, and all the issues you have in the developed world. So a lot of money is rushing to the emerging markets per se. But our view is you then have to step back and you have to say, where in the emerging markets should you be investing? Just because there's growth doesn't mean investing in the emerging markets as a whole is necessarily going to be a productive place to have your capital deployed, because as we can see now, it's bees to a honeypot. Everybody's putting their capital, and when you get an enormous amount of capital chasing the same investment, that doesn't mean returns are going to be good for investors. So we're very focused on then where in the emerging markets is the right place to be. Well, one thing we've spent a lot of time looking at is we've been looking at the multinationals and their exposure to emerging markets. And there are a number of entry points for multinationals. You could be the multinational mining companies like BHP and Rio Tinto. We don't do that at Magellan because we understand Australian investors already have that exposure in their portfolios. You could look at some of the large multinational industrial companies around the world like General Electric and Siemens, which are exporting locomotives, and they're exporting turbines and aeroplanes and aeroplane parts and so forth. And that is a potential entry point for people. We're very focused on the what's happening with the emerging market consumer. A lot of the other story I was talking about was probably the emerging market fixed asset investment story. We're very focused on the emerging market consumer story and the growth in per capita incomes in those markets over long periods of time, which is a very different cycle. And we're really then focused on companies where it's very hard for competitors in the emerging markets to effectively expropriate their brands and technology. If you think about the large equipment manufacturers like a GE or Siemens, the big issue I think they're going to have over time, or even the auto manufacturers, Volkswagen has a very large business in the emerging markets, particularly in China. But if you think about what's happening there, they can have their brands and technology effectively expropriated and then manufactured by the local players. We're looking for consumer stories where it's very hard for a competitor anywhere, whether they're in the emerging markets or outside the emerging markets, to effectively expropriate their brands. And we want the ones that have been there for long periods of time and already have a lot of brand identity with the local consumers around the world. Well, we think going after the consumer side of the emerging market growth story with these big multinational consumer names like Coca-Cola and Colgate and Yum Brands and Nestle and Procter & Gamble is incredibly complementary to an Australian investor's investment portfolio. First of all, I would say there is not a single company listed on the Australian Stock Exchange that can give you an investment into the emerging market consumption story. What you do get through the Australian stock market is effectively the fixed asset investment story, the infrastructure development, the property development, and that is really the Australian mining sector, which has a very hard to expropriate their brands because the ore bodies happen to be where they are, they can't be replicated, and they're playing on a story about that fixed asset investment story, not the consumption story. So we're trying to add the fixed asset investment story, which is the Australian stock market story, to the increasing per capita income story, the consumption story, and marrying them together with businesses that are very, very hard for local players to compete with. So I think both are very good stories. They're very different cycle stories, and I think they're very complementary from a diversification point of view. And simply the businesses we're investing in, you cannot get any exposure in the Australian stock market to that particular investment story. Yeah, in terms of the different risk profiles, I think the fundamental story is around the duration of the investment cycle. When we look at the fixed asset investment cycle going to the emerging markets, and it is really a story about China, because China is so much larger in fixed asset investment than any other economy in the world. It's about 10 times the size in terms of use of commodities to the United States of America. So when we think about fixed asset investment stories like iron ore and coal and copper and so forth, we really think about China. And the big question for that, it's growing incredibly strongly. Last year it grew at 30% per annum. So a very, very high growth rate. The rate of development, if anything, has accelerated in the last 5 to 10 years in China. From our perspective, is ultimately you're going to get to peak commodity intensity in China. It's hard to know exactly when that's going to happen. I think it's going to happen in the next 5 to 10 years. And when that happens, consumption of steel and steel inputs like iron ore and coal will actually peak and then start to decline. So the growth rates look very, very attractive for the next few years, but those growth rates are going to peak out and then actually go negative in those economies, which is, it's a much shorter duration story, a very attractive story at the moment, but shorter duration story. It then moves into other commodity stories like agricultural commodities. Potash, it's very interesting that BHP is buying Potash Corporation, or seeking to buy Potash Corporation. I think a very sensible strategic move. I haven't done the analysis about whether it's correctly priced, but a very sensible strategic view of how the commodity cycle will change in China. Our investment story is a much longer duration story. So it hasn't been growing at 30% per annum. The consumption story is growing at about 15% to 18% per annum in China. So a very attractive growth rate compared to what you can see almost any other investment places in the world. But this story isn't a 5 to 10 year story when it peaks. This story is not going to peak for 30 plus years. You're going to have very, very strong growth rates. It will moderate from 15 to 18%, but the increase in the middle class and incomes over time, they're going to be consuming more goods and services as the economy goes out of its fixed asset growth cycle and starts to going into a consumption cycle. And that consumption cycle is already going at 15 to 18%. People just don't find it as attractive as 30%, but it is fundamentally a very attractive place to be, and it's not going to reach any form of peak like the fixed asset investment story will get to in commodities for a much, much longer duration of time. So it's a different risk profile, it's a different duration story that we're playing. Well, we have about 50% of our investment portfolio exposed to multinational consumer names, non-discretionary consumer names, that have at least 25 to 50% of their revenues currently coming out of the emerging markets. The most extreme example of that, which many of our investors would understand, is Yum Brands, which is KFC, Pizza Hut and Taco Bell around the world, which is about 60% of their revenues come out of the emerging markets. And believe it or not, 40% of their profits currently come out of China. So it's a very China-centric story with about 3,600 restaurants today, with their estimates, the company's estimates, going to 15,000 restaurants by 2030. So you can see a long duration from today, almost a 20-year story, to 15,000 restaurants, and it's very, very centric China story. If I then move down to the next category of companies that are very exposed to the emerging markets, the next category of company would come a company like Coca-Cola. Coca-Cola has 50% of their volumes coming out of the emerging markets. Their third largest market in the world in volume sense is currently China. And Coca-Cola's belief, they consume about 120 million 8-ounce cans a day in China and about 1.6 billion around the world. The medium-term story in Coca-Cola is the Coca-Cola belief on per capita consumption in China. They will end up consuming more cans of Coke products in China than they consume in the world today. So China of itself could become as large as Coca-Cola is today. And then you go to India, that's also in the top 10 countries where per capita consumption is very, very low in India, but actually the dynamics and the population story, which is a much younger population than China, is actually much more suited to their products. So whilst China's so exciting, India's potentially even more exciting for Coca-Cola if you want to take a 20-year view of the size of the market. It's probably much more like the Mexican market, where Mexicans currently consume about 600 Coca-Cola products per year, every single Mexican. And you're consuming at about less than 20 in India at the moment, just to put in context, with a very young population that's very suited particularly to carbonated soft drinks. And it's really a duopoly operating in that market between Pepsi and Coca-Cola. Another company that would be as emerging market centric would be Colgate-Palmolive, which about 50% of their sales are from emerging markets. It's got a very, very large position in Latin and South America, but with Procter & Gamble that we also own, it is the equal market leader in China. It's got 50% of the Indian toothpaste market. Believe it or not, 1 in 2 toothpastes in the world are sold by Colgate. And really there's only 4 manufacturers, and the only global player virtually present in every market in the world is Colgate. So there's only one global company in oral care and only 4 competitors globally in oral care, and they happen to lead in 63 of the 65 largest markets in the world. They're the #1 player. So it is a very, very interesting story, and particularly as I mentioned earlier in this discussion, there's probably going to be another 1 billion people who become urbanised and enter the emerging middle class in the next 20 years. Maybe 500 million of those will use Colgate products. We kind of find that a very interesting place to be, with very attractive economics. And we have many other businesses. If you step down out of the sort of 50% territory and sort of the 35% of their revenues out of emerging markets, you get these very, very dominant multinationals like Nestle, the world's largest food company, and Procter & Gamble, the world's largest household products and health and beauty company in the world. And when you go to a country like China, Procter & Gamble is probably the most dominant in their categories of a company you would want to see. So if you go into shampoos and conditioners, 35% of the Chinese market is already controlled by Procter & Gamble, with brands like Pantene and Head & Shoulders and Vidal Sassoon and Herbal Essences. It's incredible the position that they've built up in that country. They're the equal market leader in oral care with Colgate, with a brand called Crest, and also their Oral-B franchise. They're the market leaders in China in disposable diapers. When you have a one-child policy, diapers are actually quite an important category in China. In feminine hygiene, in sanitary pads and tampons, the market leader is, again, Procter & Gamble. They're the market leaders in laundry care, a big emerging market in China. And almost wherever you go around the world in those enormous categories, Procter & Gamble in the emerging markets is a leading player. And Nestle is a very, very similar story in food, and of course they own over 30% of L'Oreal, the world's largest beauty products company. So we're really after these companies that have very, very entrenched and leading market positions in nearly every one of these emerging markets. And then we want to play out the per capita income consumption story, and of course because their brands are proprietary, it is very, very difficult for any player anywhere to effectively steal their intellectual property. They can copy it and put it under a different brand, but the brands mean something to consumers. In the emerging markets, for quality and other reasons, they particularly mean things for quality assurance. So we're very confident about the quality of these brands and the per capita income stories for these big multinational consumer names.